All right, good morning, everyone. I'm just going to do a quick video on margin for futures. What the requirements are. What is it? Is it necessary? Okay. So here's one of the brokers that I use. This is AMP. They've been pretty good. I'm not going to plug, no plugs or nothing like that. This is one that I've done and I've used for a while, years actually. They're pretty good at notifying you of different changes, and it's for me, you know, uh, it they provide the service that I need, and that's brokers that I use as well. But this one here I particularly use for futures. And basically the margin is like a placeholder. You have to have a certain amount of money put aside in order to take a trade. And that's at the will of the broker, how much they're requiring you to have. And you sign papers, they could, when you're opening up an account, you're signing papers saying that, yeah, you're aware of this. But a lot of traders aren't, that they could change the margin. And AMP does give you they're notifying you prior to it by email. And so it's always good to check your emails, especially during like a big volatility or something major in the world. I mean, that's what, they got to protect their assets as well. So basically what the margin is they have a maintenance margin, which is a margin they would charge you pretty much for overnight trading. So if you went from real-time hours and the market closes at 4 o'clock or 4:30, whatever their requirement is, the margin will increase to the maintenance margin per contract. All right, so one contract is $23.78, right? You got 10 contracts, $23,780. All right, but for the day trading, they set their own margins. It's saying, well, we don't have to pay the full margin, but during day trading hours, we're just going to reduce it to $40 per contract. So this is very appealing to especially traders who are just starting. They want to go with the futures. They don't want to go with the mini because it's 10 times the money, and they're learning, right? They're putting they're putting a little skin in the game. They call it. They're going to learn, but they want to learn with a little bit real money. So being that they got margin releases, this particular broker says, hey, look, the $40 day trading is out for right now. We're temporarily putting that on a hold. We're requiring 25% of the maintenance to put the trade on based on these hours. All right, so it could change. So the most important thing to get out of this video is that the broker is setting the margin requirement. You have to make sure that you have enough money in your account, aside from the trading losses or profits. Aside from that, you got to put that margin aside. If you go below the margin, they could cut your trade off. All right, they're not going to give you a warning. They're expecting you to know how much is required to put the trade on, and I don't blame them for that. So about it. So it's an important video to know, especially for beginners. I'm sure that the intermediate and guys who have been trading either got that know about this. But for you guys that are just beginning, keep that in mind. All right, especially guys who may not have an account. Actually, they may have an account, maybe $2,500. Yeah, you could probably trade $40 contracts. Requirement, $40. That's okay. But if you take that trade past the day trade time, you may not have enough money to cover that margin, and they're going to cut your trade off. So basically, that's about it. If you like this type of content, man, this is nothing trading. Or if you haven't seen any of my actual trading videos where it's unscripted and I go through trades throughout the day at certain points of the day, I'll just log in and take a trade. That's it. So look at those. Thanks for watching, and hopefully this information is useful. I'll see you on the next one.